Welcome to a special episode of Happy Hour Holidays. We are here with Shawn Miller, literally the premier lender for the Bay Area, which is Pinellas, Pasco, Hernando, Sarasota, Manatee.
Hillsborough, yep.
With Van Dyke Mortgage. You guys see it on the screen right there. And we're going to talk about, what are we going to talk about, Shawn?
Well, we could talk about the real estate market, the mortgage market.
Well, let's talk about how fucked the real estate market has been.
Well, it's interest rates have been a little bit, wild over the last several years since the Federal Reserve stopped buying the mortgage-backed securities. That was in March of 2022. You saw rates in 2022 go from 2 to 3% to 7 to 8%, in 1 year.
Is that deterring people from potentially selling their homes, buying a house?
I think it has, in 2023, 2024, 2025, we had periods of each year where rates were 7 to 8%. Now, of late, over the last, month or two,
they dropped it by 0.25, right?
Yes, the Federal Reserve dropped the Fed funds rate by 0.25%.
Fuck you, Jerome Powell.
Which actually, 5 of the last 6 times when they've dropped the Fed funds rate, it actually increased the long-term fixed rates.
How is that possible?
So the markets already are baking in the fact that the chance of them cutting the Fed funds rate, they already know there's about 80 to 90% chance of them doing that. So they already factor that into the rate pricing. So then when different news comes out for the jobless claims, for inflation numbers, for personal consumption expenditure, for retail sales. So those things can sway the markets. Now, we've seen some major improvements with rates over the last few months. So, I've locked in one in the high 5s, locked in some in the low 6s. So now when that happens, that starts to
How is that possible? Did they buy down their rate?
To get into the high 5s, they did. Yes. And then the average,
And how far can you buy your rate down? I know there's a limit, right?
Yeah, the government's going to not let you pay a certain percentage, above a certain percentage in closing costs. So you're not going to be able to buy your rate down right now much higher than the high 5s. Maybe on the government loans, which would be FHA, VA, USDA loans, you could buy it, you could get it down a little bit further.
So that high 5 one that they bought down, I mean, what kind of loan was that?
That was I had an FHA loan, a conventional loan. So that's been encouraging. Last year, we had a very short window with rates in the mid to high 5s where we could do a buy down. I remember it was 2 weeks before the first hurricane came through. We had our best rates of the year last year. And then 2 weeks after the last hurricane through, we had our worst rates of the year. Nothing to do with the hurricanes. It was just with all the news going on, with wars, with, the inflation numbers. Those are big drivers.
I know when I bought my house, I used you as my lender.
Yep.
And I have a 3.25 percentage rate.
The good old days.
The good old fucking days. That was back in 2021.
Yeah.
Is it ever getting back down to that?
I personally don't think so. I think probably our best case scenario, we have rates between 5 and 6%.
And that's to be standard from here in 20 years, 30 years?
Historically speaking, I did.
Because didn't 07 have rates that were as low as it was in 2020, 2021?
So I got into the mortgage business
and that was only a 13
in 2003. I did no home sales from 01 to 2003. So from 2001 to 2008, when the market tanked, rates were for the most part in the high 5s to low 7s during those years.
Really?
Then from 2008 to March of 2022, the Federal Reserve was doing quantitative easing, where basically printing money, buying the mortgage-backed securities, buying the treasuries to keep the rates artificially low. So we had rates, from 08 to 2000, to 2022, anywhere between 2 to 3% to 4 to 5%. We did have, some stretch 5 to 6%, but for the most part,
Shawn,
really
what I'm
rates.
hearing here is that it is possible for it to go back down to 3%, 4%.
If the Federal Reserve steps in and they start, I don't know if you call it manipulating the currency, but buying the mortgage-backed securities again, it could go down. But from what I hear, probably best case scenario without that happening between 5 and 6%.
Have you heard that Donald Trump is thinking about not privatizing, making Fannie Mae, Freddie Mac public so people can purchase quote unquote stock equity into those companies. What do you think about that? That's pretty smart, or is it not a good idea?
I mean, I've heard both sides of the fence with it, of course, with politics, with everything.
Well, it's not politics, right?
Yeah,
It's economics.
Yeah. They're making a lot of money now, Fannie Mae and Freddie Mac, where that they were losing money, like after the market tanked in 08, 2008, 2009, 2010. Now they're making hundreds of millions of dollars, billions of dollars. So, offering that up to the public,
not a horrible idea, right?
I would think that could be. I think that could be a good thing.
Could be.
Yes.
Could be. Yeah. We're not absolute here.
Yeah.
We're not absolute. Well, okay. So, Van Dyke Mortgage, you guys been a staple since 1987.
Yep. I was 11 then.
Shit, before I was born. Oh, you were 11 then.
I was 11. Yeah.
I mean, so why Van Dyke Mortgage? Why did you choose them?
Yeah,
you have your brokerage license.
I'm a loan originator, and I'm a branch manager there. But loan originators for lenders, they have to have their loan originator license.
So at 11 years old, you were like, you know where I'm going?
I got a mathematics degree in college, and then I got out of college, and my best friend got a job as an actuarial assistant at Nationwide Insurance over me, and I went into sales, and I really never went back. So I still kind of use my mathematics degree.
Yeah, but you use calculators, right?
Well, we do that in our mortgage software. As far as Van Dyke Mortgage, I've been with them for 15 years. Prior to that,
I want to go back to the mathematics degree real quick. What's the derivative of x squared?
The derivative of x squared. That's a lot of brain cells ago.
That's 2x, bro.
That's a lot of brain cells ago.
Oh, okay, so mathematics degree doesn't translate into engineering, I'm assuming.
Well, I'm 49, so that's going back quite a few years. I did ace Calc 1, 2, and 3 back then. I'm not sure if I could do it again.
So what was the highest form of mathematics that you had to take the class?
Calc 1, Calc 3 was the highest.
That's it?
Yeah. Well, you had statistics, you had numbers theory. Again, this is a long time ago.
Dynamics?
I think trigonometry was before that.
Did you go to USF?
No, I went to Mount Vernon Nazarene College. It was a private school and a private Christian school in Ohio.
Oh, okay, gotcha.
Yeah. So I started my originating career up in Columbus, Ohio. I moved down here to Tampa in 2006. I had 3 or 4 companies go out of mortgage companies that I worked for went out of business in a row. And Van Dyke Mortgage, I joined up with them 15 years ago. I'm a branch manager there now. I like working there because as far as mortgage lending goes, we operate the same as like a bank can. So we can do FHA loans, VA loans, conventional loans, USDA. We process, underwrite, fund, we service the loans, but we also have the ability to broker out like our portfolio products, which that's becoming more popular these days.
When you say portfolio products, what do you mean by that?
For self-employed people, your bank statement loans, we can use 12 months to 24 months of their personal or business bank statement deposits and use that for income.
So stated income loans?
Well, not stated. We add up all their bank statement deposits over 12 months, and then we divide that by 12 months to get the monthly average, and then we typically use like a 50% expense ratio. And we can use that for income.
Isn't that a stated income loan?
Well, I mean, it's not quite there. I mean, like stated used to be a lot easier back in 2003, 4, 5.
But because of the regulations.
Yeah. So now they have, you have to have a 10 to 20% down payment for the bank statement loan product.
Do you guys do business loans?
We can do loans in the name of an LLC. For
SBA?
For residential properties. I don't do any.
Oh, so you guys are just
residential, yes.
Real estate, and that's it.
Yeah.
Gotcha.
I mean, we can do like for like 5 to 10 unit apartment buildings, but not. I don't specialize in like doing like your building.
That's an interesting number. You said 5 to 10. I mean, anything over 10 can't do.
Well, typically it's anything from 1 to 4 units is like a conventional loan or an FHA loan or a VA loan. So you can do a multifamily. But for anything over 4 units, we have like a few portfolio lenders that we can broker them out to. So I like having the ability to do that. We have like investor no income document loans. So if you're buying investment property,
no income,
don't need any tax returns, W-2s, pay stubs. All we get is the rent schedule off the appraisal. And as long as the rent schedule, the estimated projected rents for that property are the same or higher than what your mortgage payment's going to be, I don't need any income documents. If it's going to
really
be
the same,
if the rent are the same or higher. So if your mortgage payment's $2,000 a month.
So the landlord wouldn't be making any money, but at least the bank gets their money, right?
So we just want to make sure that mortgage payment's covered. Now,
what about Section 8 property?
Yeah, we can do that.
Yeah.
Like I own a duplex that's approved for Section 8 on both sides.
Mm-hmm.
So yes, we can do that. And these portfolio products are becoming very popular, especially on condos. In Florida, condo financing is not as easy to get done because of the milestone inspections that are now required from the building that collapsed in South Florida.
And the COA requiring all the money from their residents to pay for the improvements of said building.
Yeah, so the condo associations, so they're
So are you seeing a lot less loans for condos in Florida? Yeah.
Well, fortunately, we have portfolio products that the guidelines are not as strict to get the condo project approved. They don't have as strict guidelines with the deductibles on the master insurance policies. Some of them do not require any condition questions to be answered. So you're bringing up on the special assessments from the condo associations where the HOA is putting special assessments on the unit owners for whatever, to fix the stucco, to fix cracks,
structural damage.
Yeah, correct. Yeah, the balconies or the foundation. So some of these special assessments are pretty hefty.
Yeah, and what's like the average that you're seeing for a lot of these purchases?
Well, I've seen like the condo fees for I had a first time home buyer that bought in South Florida. His condo fee went from $400 a month up to $800 a month.
Jesus fucking
and
Christ.
For somebody that's making really good money, they can afford that. But he was a teacher and he was making $65,000 a year. An extra $400 or $500 a month for a teacher. That's a little bit scary.
Why is he buying a condo?
Well, back then that was the condos used to be the most affordable type of property to buy.
Not on the water. Well, I don't know. Was it on the water?
Well, it was in Palm Beach County, so it was close enough to the water, but it wasn't on the water.
Gotcha.
Where now, condos aren't the most affordable to buy when you're factoring in that condo fee. And I'm just prepping my clients. Hey, listen, if this condo fee goes up by $200, $300, $400, are you okay and prepared to be able to make that? So, just educating the client, it's not just a transaction. You want to make sure you're setting them up for success in the long run.
So, Shawn, I also got this, man. A lot of lenders and realtors do not tell the homeowner or the person purchasing the property that once their property gets reassessed, their mortgage payment's going to go up.
I had a feeling that's what you were going to ask.
Yeah, okay. Fuck yeah, it was.
Okay, so
because I saw, and not a knock to you, but to all lenders, it's they're like, yeah, let's give you this home. The realtor, yeah, let's give you this home. Next year your mortgage is going to go up around $500-800. Hey, because it gets reassessed. What the fuck, bro? How come we are not educating home buyers on this fact?
Yeah.
And we are doing it right now.
Yeah. I mean, the lenders, the realtors, they need to be prepping their clients for that increase.
Now you did tell me. So knock on Van Dyke Mortgage.
Well,
yeah.
I mean, it comes up. So I'm on the phone with a client. If the homeowner that they're buying it from has lived in that property for a number of years. So one huge benefit for living in Florida is the Save Our Homes cap that we have that only allows that your assessed value, your taxable assessed value can only go up 3% per year.
After you own the home.
After you own the home and the home sits under your name. So you close in 2025.
21.
Well,
okay. 2025.
Okay.
Yeah.
So if you're closing in 2025, you're going to file your homestead exemption for 2026. Yes. They're going to reassess the property based off of the new purchase price, not per se exactly the new purchase price. Generally, it's about 80 to 85% of the purchase price generally. Yeah. But I have seen times where the assessed value actually was the same as the purchase price. That's very rare, but it has happened.
I've never seen that.
Very rare.
Yeah.
But especially now when we have some values declining in certain areas, you may not see as impactful of an increase in taxes. But yeah, you're right. I mean, some of these clients, if the homeowner's owned it for 20 years and their tax bill is $4,000 a year, and you're buying that house for $800,000,
and they bought it for $100.
Yeah, correct.
Now all of a sudden, its tax assessed for $685. and now property taxes are through the roof.
Yeah, $8,000, $9,000. Yeah. So,
and not to mention CDD or HOA included within.
Yeah.
Well, it depends if you escrow into the.
Yeah.
Yeah.
So with us, we're going to typically go off of the seller's most recent tax bill for qualification purposes. Now, this time of year, the trim notices are out. So we are pulling that.
What do you mean by trim notices?
Trim notice is what the projected taxes are going to be.
I got that.
So our taxes in Florida come out November 1st. So, so then that tax bill that comes out now is going to be based off the current seller's like situation, if it's their homestead property and what that assessed value is going to be.
So it gives like 3 rates, right? It gives the one that you paid, the one that it could be, and another
and
option.
The proposed. Yes. Yeah, so if like all the, is it the amendments or proposals?
Exactly. If they agree with that. Yeah, exactly. So like, I mean, it was like a $900 difference between the first column, the second column, and the third column.
Okay. Yeah. Depending on what proposals there are. Now, most of the counties.
When do we find out which one that they're actually going to do?
Well, I mean, the tax bill comes out November 1st. So that's when you know exactly what it's going to be.
And we get
we have what you have like the voting for, is there elections every single year?
No, 2 years? I don't think so. Every 2 years.
Okay. Yeah. And I'm not sure exactly on the proposals, but I know you know for sure what the tax bill is going to be on November 1st.
So the Hillsborough County property appraiser sends out your tax bill November 1st.
Yeah. So even if you have an escrow account, you're still going to get a copy of that tax bill in the mail for your records. And most of the counties are going to have tax estimators. So for your home buyers that are going in and purchasing a house, they can go on to the Hillsborough County property appraiser. Pinellas County, Pasco County. Pinellas County, I like it there where they default it to 86% of the purchase price on their tax estimator, where Hillsborough County, they default it to the purchase price. Pasco County, they're defaulted to the purchase price. Now, that is erring on the side of caution.
I would say so.
Okay, but because generally it's not that high. But when a client goes in and looks at the tax estimator on that site and they put the purchase price in, it is a little startling, scary. You know,
it's a conservative estimate.
Well, I mean, actually, on the property appraiser, it should be more than concern. I mean, it should be the opposite. It should be probably higher than what it's going to be. Should it be the opposite?
Because, I mean, the home buyer should see what the most impactful.
Correct. Yes.
So, I mean, I don't disagree with that. I mean, when you are showing 86% of purchase value, you're basically saying, okay, well, you know, this is probably what it will be. Whereas in Hillsborough County, they're saying, yo, this is the most you're probably going to have to pay.
Now, something else you have to be careful of on certain tax estimator sites, they don't include the non-ad valerums portion of the tax bill. So if you have a CDD.
Can you explain that?
Yeah. So like there's an ad valerums portion of the tax bill, which everybody has. So Pinellas County, you're not going to typically have any communities that have CDDs or community development districts. But
I can't think of it.
But in Hillsborough County, Pasco County, communities usually built after 2000, like if there's a community pool, if there's tennis courts, golf course, fitness center, then you may have your community development districts. Those are in the non-ad valerums portion of the tax bill. In some counties, that will not be included on the tax estimator site.
Can you explain why, after a community is developed, why a CDD is still required? Because the community is built. It's done. It's over.
Yep.
Why is it that the residents have to continue to pay for community development when the community is already developed?
So my understanding is they're either on
like West Chase.
Okay, they're either on 20-year bonds or 30-year bonds is my understanding.
So eventually it goes away?
So we live in West Chase, we live in the Greens, and we bought our property in 2018 and my CDD went down in 2020.
It can go down.
The house was built in 2000, so it went down in 2020. Now they were talking about
that's fucking 25 years, Shawn.
Well, and they were talking about putting a biking trail through, like I guess through the middle of our community, and that was going to increase the CDD. And I guess the homeowners they voted
fuck no,
against that. But yeah, I think they're typically on 20-year bonds or 30-year bonds. They may renew for like upkeep, like in our.
Who decides the renewal?
Well, like in our community, we have a community pool, and like they redid the whole entire community pool.
But you also have an HOA, I'm assuming.
HOA. I'm not sure if the HOA goes towards that or if it goes towards the lawn maintenance, the security guard, the
Well,
gates,
isn't this some
and
bullshit,
common
huh?
areas. Yeah. So
Isn't this some bullshit?
yeah. So I don't know all the rules. I'm
We
not on the
gotta
board.
pay CDD, we gotta pay HOA, and none of it ever goes away. HOA I kind of get,
Yeah.
but CDD, if they're not developing, and you said the bike path, they said no to that.
Yeah.
Community voted no.
Yeah.
Yet you guys are still paying. And bro, West Chase has been around longer than that.
Yeah.
West Chase has been around since like what, 1995?
I think our community was built in 2000. Our HOA fee is only $275 a year though. So
yeah, because HOA is low, CDD is high.
Yeah. So the CDD.
Damn, dare I ask, how much is your CDD?
I think mine's only like 800 now that it went down.
Oh
I
wow,
think.
that's not much.
But in like in Water Chase and as another community in West
Which
Chase,
is off of, well, it's not really in West Chase now, is it? It's off a racetrack.
Correct. Yes.
So I mean, that's outside. That's almost
in between West Chase and like Odessa.
That's like Eagles almost.
Yeah, correct. Yeah, almost there.
Yeah.
So there, I think their CDD is like 1,800. Now I have a client buying down. It was either Brandon or Riverview. They're buying a $335,000 house. The CDD is like $2,400, $2,800. Their tax bill is $9,500 for a $335,000.
For right now, until it gets reassessed.
Well, okay. yeah. So the buyer was like, man, I almost have like a $700 tax bill and I'm buying a $335,000 house. I was like, well, you're going to get some amenities with that as well too.
Sure,
Community pool, fitness center, tennis courts.
What's the neighborhood? I'm just curious.
Can't remember what it was called. But she actually decided against it.
So I live in Heritage Isles,
okay,
which and our CDD is around 3,500 because we have a golf court, our golf course, resort style pool with a water slide, a restaurant, a fucking tennis course, pickleball course, basketball court, dog park, fucking all this bullshit. And the only thing, HOA is only $40 a year. But I'm thinking to myself, like, what the fuck, dude?
Yeah.
It's outrageous in my opinion.
Yeah. Well, I mean, I guess that's why some people choose to move to communities that don't have HOA fees, don't have CDD fees.
Fuck, man, I should have moved to Dade City. No, dead ass serious. 2 acres up there, no neighbors, and I mean, shit, maybe drive around and. Well, I got a golf cart.
Yeah. Well, we have a number of clients now that they're having to move to different areas to be able to, have an affordable home. Like, so average purchase price in Hillsborough County, I think it was like $530,000 last month, I think. And
holy shit.
Pasco County, I think was like $485, and Polk County was $350. So we have some clients that are moving over to Polk County.
What about
to get more
Pasco?
Pasco was less than Hillsborough. I think Pasco was in the 4s. Hillsborough was in the 5s. I think Pinellas County was in the 5s.
Hernando?
I can't remember. I don't.
I'm testing your knowledge right now.
My ops manager tracks all these. He does Hillsborough, Pasco, Pinellas, and Polk. I can't remember if he did Hernando. I apologize, Jason, if you're watching this. If I missed that part of your presentation.
What about Manatee?
He doesn't track. He doesn't track that either.
Sarasota?
So. South of
Sarasota County,
it's county specific. So I have a client that came in yesterday that they're buying and flipping properties, and they were able to get some really low prices in Sarasota County. On some properties that they bought at foreclosure.
And the majority of that was due probably to the 2 hurricanes, Helene and Milton, that hit last year that devastated the communities.
Yes,
and. It was more so. Was it Helene that had the storm surge? I think it was.
Yeah, that was the
first one, right?
So Helene was Milton was the flooding, wasn't it?
Okay, Milton was. Yeah, Milton was the one that came in with the storm surge. Yeah, because a buddy of mine, he lived in Colbert Isles, and bro, they evacuated after the fact.
Yeah.
So they had to drive through about like 2 feet of water to get out of their house, and they sold their house gutted. Like, they didn't even rehab it. They just sold it because that's what they had to do. And we'll be right back with Happy Hour Holidays and Shawn Miller, Van Dyke Mortgage. And we are back with Shawn Miller, the premier lender in Tampa Bay. And what were we talking about?
What were we talking about? The last 2 storms.
We were talking about how. I don't even.
I think it was the last 2 storms that came through.
Yes, Helene and Milton
last year.
and how they completely fucked all residents. And I was telling you about a buddy of mine that had to sell his house in Colbert House because, and with it not even being done. Let me ask you a question. With Van Dyke Mortgage, with all these houses where they cut out all the drywall and they were trying to dehumidify, I think, or demold or whatever it was.
Yeah, get the moisture out. Yeah.
Would you guys actually lend on a property like that?
On a regular conventional FHA VA loan? No. On a renovation loan? Yes. We can do conventional FHA VA renovation loans.
So what's a renovation loan?
Where they'll basically get a contractor estimate from a general contractor for whatever they're going to remedy: drywall, flooring, countertops, bathrooms. You can roofs, and pretty much anything they can do, and then they can finance in what they're going to do the renovations for into that loan amount.
Really?
So if your purchase price is $280,000 and you're going to finance in $70,000, you could get basically your loan to value would be based off of the subject to value of that home. So subject to like putting a new roof, flooring, bathrooms, so they'll get comparable sales that have all been renovated.
Do they need to take draws? Do they need contractor quotes? All that?
Yeah. So ideally, if they have like a general contractor,
so let's say they buy it for $280. Let's walk it through slowly. Let's say they buy it for $280. You guys are also they have a list of quotes to completely rehab the home.
Yep.
So you're going to give them draws, or are you giving them the full lump sum?
So they're going to close on the transaction as normal. The seller will get paid as normal, and then we'll hold back whatever funds that they're going to, give to the roofer. They're going to give to the flooring company. They're going to give to the.
And they have to send you that, and then you guys pay for it.
Yeah. So they'll release it in draws. So they might give the contractor X amount for the materials, and then X amount after it's all done. If it's for larger products, they may give X amount for materials, and then they'll need more materials at different stages. So they'll give them anywhere from 6 to 9 months generally to get the renovations
So
done.
Can you also now, because that's an interesting topic, can you walk us through how a new construction loan works? Let's say, and I'm going to paint a scenario here.
Okay.
There's a dilapidated property on a very pristine lot. Okay. Are you guys, and they put 20% down.
Okay.
Are you guys loaning on the expected value or on just what the value of that property is for the demolition, for the reconstruction, and the new construction?
Okay. On a renovation loan or a construction.
Is that a renovation loan?
Or a construction perm loan where they're going to tear the house down and rebuild it. Yeah. We'll go off of the subject to value after completion. Now, I do have one client that purchased a house, hadn't been remedied, and he's tearing it down. We treated it as a lot loan. We didn't give any value to that property.
So you didn't give any value to the structure.
We did a lot loan.
But what about to the demolition?
Now he's tearing it. This client was tearing it down at his own, out of his own pocket.
Expense.
And then after that, he was also combining. He basically his house got flooded. He bought the neighbor's house right next door that got flooded. We did the neighbor's house next door as a lot loan, and he was going to be tearing both houses down.
And he was paying for the demolition.
Yeah, he was paying for that out of pocket. He's combining both parcels, and then we're going to do the construction perm loan to build the house after that's done. So that was done a little bit differently because he didn't want to be in a hurry to do this, and he hadn't combined both parcels. Now, if it wasn't a situation where he was buying the house next door and he was combining both parcels.
What if the city doesn't approve a combination of lots?
Well, that was why we did it one like this, because the lender would not allow it to be done until the two parcels were combined, just in case they didn't approve it.
Yeah.
So he was okay with it. He talked with the county before, he bought the property, and basically they gave him the thumbs up, but we didn't have documentation for that. So once the parcels are combined, once it's demolished, then we'll do the construction perm loan to build the house.
So here's another one. Let's say that we go up to Dade City.
Okay.
There's 10 acres up there.
Okay.
All right. And we think to ourselves, let's build a subdivision up here.
Okay.
and we get civil engineering plans for the roads, everything, and we're subdividing everything. Do you guys provide loans for that? It's residential, Shawn.
Yeah, so we can do land loans, and if
but are you providing lending for the permitting process of FDOT?
No, we wouldn't.
So they got to pay for that out of pocket.
Yeah, they would have to pay for that out of pocket.
Goddamn lenders are so stingy.
or I'm sure like some of the new home build lenders, they have like lines of credit for their businesses, warehouse lines that they can use to pay for those sort of things. But we can do land loans. If your intention's to build on it, it's 25% down. If your intention's not to build on it, it's 35% down.
But it's one house.
Well, that would just be for a piece of land. And then if you're going to decide to build on it, then we could just do the construction perm loan after the fact.
So the subdividing and the permitting process, you guys have no hand in it.
We have no hand in that.
You guys are just saying, okay, you want to buy the land? Okay, 25% down. And take care of the rest, and then when you want to build, then we'll lend again.
We can lend again.
Is that another 25% down?
When we're doing construction perm loans, it's for the actual buyer of it.
You keep saying perm. What is perm?
Permanent, like a construction permanent, like a construction loan.
But
basically, it's a one-time close, so it's not like they don't have to close again at the end. So we're closing, locking in the rate up front before the build even starts. And then basically after it's done, it's like that's converted to the permanent financing, and they do give them options where they can do what that day's interest rate is for like an additional cost.
So Shawn, I've noticed that a lot of lenders sell off their loans.
Yeah, so we're a direct Fannie Mae, Freddie Mac, that's conventional loans, seller servicer, Ginnie Mae, seller servicer, Ginnie Mae's government loans, FHA, VA loans. Whenever we close a loan, though, even if we're going to keep the servicing, it still gets sold as a mortgage-backed security, as a Fannie Mae mortgage bond, or a Freddie Mac mortgage bond, or a Ginnie Mae mortgage bond. That's how lenders get money back. So we sell them as mortgage-backed securities.
Can you explain that process a little bit?
Well, I don't.
Why do you guys do that?
Well, so I don't deal with that end of it. That's our secondary servicing department.
Speculate.
Maybe, and we can also sell, instead of selling it directly to Fannie Mae or Freddie Mac and us keeping the servicing, we could sell it to Truist, Wells Fargo, Bank of America, PNC, and like.
Why do lenders sell
loan
loans?
care? Sell the loans so we can get the money for them. Versus if you're servicing it, you don't get all the money back.
So lenders aren't really making too much money on loans because they sell them and they probably make like, I don't know, 5 to 10% on the loan because they sold it at a rate where the purchaser can make money.
Yeah.
Right.
And again, I don't deal with the secondary side of it, but I would guesstimate it's probably in like when they're selling it off, probably like in the 1% of the loan amount range.
Less. Yeah,
I would say probably like that much for the servicing, like for the lender that's selling the loan.
So you guys do all the work, and then
it's a lot of work. It's a lot of dotting of I's, crossing of T's. I've been doing it for 22, 23 years now, and like
1% of 300,000 is what, $3,000?
Yeah. But if you're doing a couple hundred loans a month,
no, I get it.
Yeah. I'm not doing a couple hundred loans a month. I do about 10 to 15 loans a month myself personally.
Yeah.
Yeah.
Oh shit. Damn. We're talking to the rich guy over here.
I mean, we've seen some improvement with interest rates of late, so that has helped out a lot of clients being able to. First and foremost, with interest rates having been higher for the last few years, more houses are on the market. It's becoming more of a buyer's market. Buyers can negotiate. They can negotiate lower prices, seller concessions toward their closing cost. You can get contingent offers accepted, like if you're trying to sell a house, where back in 2020, 2021, 2022, when rates were really, really low, it was hard to get the seller to pay any closing costs. Most people were going in above the purchase price, sometimes $100,000 over the purchase price.
So you call it a buyer's market right now, which it is. What advantages can buyers take that they couldn't take back in 2020
You can get longer closing. So if you need 45 or 60 days to close on a renovation
Why would
loan,
they need? Oh, okay.
like let's say on a renovation
Yeah.
loan, or you have like I have a client that their lease is up in January, and especially the first time home buyers, they always try to time it out exactly for when their lease is going to end and when their first payment's going to start or when they're going to. It's very difficult to do that, and so I don't encourage that to be done. But yeah, you have some clients that want to kind of not have to pay like a two payments at once. They have a house to sell. Like back in 2020, 2021, if you had a house to sell, there's no way you were going to be able to put a purchase contract offer in contingent upon you selling your house. Now I'm not saying it happens all the time, but you can get those offers accepted, especially if you have your house listed. You got the pictures taken, photography with Fabry frameworks.
Yeah,
okay?
with Fabry frameworks.
Yeah.
Hey!
Yeah. So you have those situations. Getting $10,000, $15,000 from the seller to pay towards the buyer's closing cost.
Now you can.
You can. Of course, not on every transaction, but if you have houses that are listed for 45, 60, 60,
more than
75,
that, right?
90,
180.
Yeah.
Yeah.
I mean, the sellers are more willing to work with the buyers to accommodate, their, I don't know if call it demands.
What do you attribute that to? Is it because of the interest rates? Is that really? Because, you brought up interest rates quite a few times. A lot of people don't realize that interest rates back in the 1980s was like 12%.
Yeah, I was a kid then.
Yeah. So, but now people saw what happened in the 20s and 2020s, and they saw the 3%, the 2%, and they were like, oh my God, we got to wait for that. What do you say to the buyer that's still waiting for that? Hey, it's not actually going to happen.
Yeah. What happens if it doesn't happen? I have clients now that we're working on refinances for the first time in a while where, I had clients that were at 7.875, 7.99, 8.125 from back, end of 2022.
Cash out refis
beginning
or
2023.
just refis?
They're just like I closed one at a 6.625 rate, another at 6.375, and we're reducing their interest rates. A lot of clients are doing cash out refinances where credit card
is that a good idea?
Credit card balances are at all-time highs right now. So I have clients where they'll go up in interest rate, let's say from 4.5 to 6.5. However, they're getting rid of $60,000 of credit card debt, $80,000 of credit card debt, being able to pay off 3 car loans, and like it's saving them. I had a client that went up in an interest rate from, I can't remember, I think it was like 5% to like 6.25. And we paid off a car, all their credit cards, and they're retirees, and it's saving them almost $2,000 a month. That's life-changing for people that are just on Social Security or pension. Yeah. Yep. So those situations are rewarding for me to do. The refinances where you're actually like saving them money per month. Where a purchase transaction, it's rewarding, but they're typically increasing their house payment from what they're paying now.
We were talking about what it sounded like was retirees. What the fuck is a reverse mortgage? Explain in the simplest sense.
Yeah. So essentially,
is it a scam?
Definitely not. No, you can do it. You can do it as a purchase transaction. You can do it as a refinance transaction.
What is it? What is a reverse mortgage?
Essentially, you're doing a mortgage where it's kind of like a home equity line of credit, where the balance will keep increasing, your loan amount will keep increasing, but you can avoid any monthly payment on the home for the rest of the time you're in the home. So you don't have to pay your principal and interest payment while you're in the house.
No, you got to explain it better than that, Shawn.
So somebody that it's on a fixed income, doesn't have a lot of disposable income.
I'm a child.
Okay.
Explain to me a reverse mortgage.
They're typically going up to about a 35% loan to value of what that home's worth.
Well, that's not even that.
35, it depends on their age, 35, 40, 45% loan to value. It doesn't go very high.
And they're giving that money back to the homeowner?
If let's say it's owned free and clear, they can get half the proceeds after the first, at the closing, and then half the proceeds 1 year later.
So I have $100,000 house. I'm getting $35K back?
Well, yeah. Hypothetically speaking, your house is worth
$100K, just only $100.
Yeah.
Just for sake of numbers, guys.
Yeah.
So I have $100,000 house. I'm a retiree. I get a reverse mortgage. I get $35K?
Yeah, or if it's worth $1 million, you're getting
You're getting
350
350K.
to
Yeah, yeah, I get
400,000.
it.
So I had a realtor.
And then after that,
so I had, then you just don't have a house payment.
well, you still own 65% of the house. I mean,
Correct, but like
does the bank own it?
the loan amount continues to increase, and then when that person passes away, whatever equity's left in that house, it can go to the heir.
Oh shit!
Yeah, or if it's upside down, the government will eat the difference.
Yeah.
Yep.
So that is a reverse mortgage.
Yep, and you can do that as a purchase transaction or a refinance.
Is that why Joe Namath is on all these commercials?
Well, we don't watch commercials in our house anymore.
Oh, he's streaming. He's streaming.
Yeah, just the forced ones. You know, when you're watching the Netflix or Amazon Prime. I had a realtor. His mother did a refinance on a reverse mortgage. She got
a refinance on a reverse mortgage.
Yep.
What the fuck does that even mean?
Well, so she pulled the cash out, and she pulled out like
so there's interest on the reverse mortgage.
Oh yeah. Yes.
Oh
correct.
shit. Okay.
Yeah, and the interest is going to be higher than what it's going to be on.
But you don't pay it as the person that took it out, right?
You could, in theory, if you don't want your loan amount to keep increasing. But most people, I don't think, on average, are going to.
What do you mean by the loan amount keeps increasing?
Because if you're not making payments,
why would you? Because it's your equity. The bank takes that equity, right?
Well, no. When they like if they pass away and if they have $200,000 of equity in that home, their heir would get that $200,000.
Yeah, but you're saying interest.
Well, your interest. So if like you take a loan amount out for $400,000 and the interest rate on the reverse mortgage is 7%, 7% is going to keep accruing on that if you're not making a mortgage payment. On top of the $400,000.
So it's a HELOC.
Essentially, that's what I'm saying. It's essentially like a HELOC that you don't have to make a payment on.
Is it a wise choice for retirees? Or
I mean, if you're on fixed income and you can't afford the payment, yeah.
Well, as a lender, yeah. Do you suggest it, or are there better products? That Van Dyke Mortgage offers.
I have never personally had a client that has closed on a reverse mortgage with me personally. I've taken several applications. I've taken multiple applications, but a lot of them have been either tire kickers or the ones where it did make sense. Kickers? Kind of like in new car sales. They're just kind of checking it out.
Oh,
just
okay,
to see
gotcha.
But the one client that it did really make sense with, the one daughter would not approve of it.
Really?
Because it was cutting into her equity. That she was going to get.
So she was selfish.
When the mom passed away. Yep.
Yeah, you gotta watch out for your kids.
Yeah, and it truly did make sense for her because she didn't have a lot of disposable income and she needed an influx of cash, but her daughter convinced her otherwise. So, I'm not there to convince her otherwise. You know,
actually, shouldn't you?
Well, I mean, I present her the options. I talked to the daughter that did approve of it, and she was actually a real estate agent that we work with, and it was her sister that didn't approve of it. So, but I didn't want to get into the family conflict. So I talked to the realtor that referred her mom to me, and she said, my sister is just not about it, and she's not wanting my mom to do it.
Has there ever been a time where you overstepped and said, you know what, where you should have, and you were like, you know what, you're making the wrong decision right now?
Yeah, so I didn't have the communication much with the mom. I didn't have the rapport with her. I had the rapport with her daughter.
No, I'm talking about a different situation. Has there ever been where you were like, yo, you're an idiot for not making this decision?
Well,
and I'm not saying you're using that vernacular. I'm just saying there has to be a situation where that happened.
I butted heads. I if you call it butted heads. I had a mother who I was working on a purchase transaction for, and she had co-signed on multiple cars with three of her kids.
Jesus
fucking
Christ.
and she didn't make a lot of income. Now this was probably
she had great credit though.
Yeah, this is probably like 7-8 years ago. And I gave her my input on, maybe you want to have your daughters refinance you off of these cars you're co-signed for them so you can qualify to purchase a house on your own, because this is affecting you buying a house. And she told the realtor she didn't appreciate me telling her how she should handle her family affairs.
Honestly, that is great advice.
Yeah. So
did she end up taking the advice?
No, she actually didn't. She didn't end up buying a house, and she didn't talk to me ever again.
Holy fuck.
Yeah.
Man.
So now I do try to like, watch the way I like word things, but like, it's never a good thing.
So you try to be political.
Yeah. It's never a good thing to have to co-sign, for your kids to purchase a house. I say to my clients.
Wait a second, but it's not a terrible thing, is it? Because you also are half equity owner of that house, right?
Well, you would want to be.
And if you can afford it.
Yeah.
Because if you
Yes.
co-sign, you are half equity owner, right? Or am I wrong?
You should be on the deed. If you're not living in it, you don't have to be on the deed. But I would, if I was co-signing for my daughter,
if you're mortgaging,
if I was co-signing for my daughter, or if I'm putting the money down on a home for my daughters, now they're 8 and 11, so it's a little bit of time yet.
Yeah.
But like if I'm doing that, I'm going to want to be on the deed
Fuck
for that home. No, some buyers don't have the option but to have their parents co-sign. So if that was a situation that made sense for me to do that for my daughter, okay. But if you can avoid co-signing, I would. Do
you see a lot of that where there's a co-signer but they don't put their name on the deed?
Very rare. Very rare. We have a down payment assistance product through the Florida Housing Department where they can get
what is it?
$10,000 of down payment assistance, or there's a Hometown Heroes product for
$10,000 for 3.5% FHA. Is that what it is?
Yeah, you get $10,000.
So I mean, what can you afford for 10,000, 3.5%?
Yeah, well, I mean, it gives them.
Well, no, I'm asking.
Yeah, it's 10,000 less than they would normally have to bring in. So if they're at a $200,000 purchase price, which that's not going to happen, but if they were $200,000 for simple math, that's $7,000.
$7,000.
Or if they're at $300,000,
damn, bro,
that's
so
like
people can buy houses with no money.
Essentially, this Hometown Heroes product that we have, they can get up to 5% of the loan amount.
What is
right now.
Heroes?
It's people that haven't owned a home in the last 3 years. It's for your first responders, people in the medical field, police officers, firefighters, nurses, teachers, veterans, people in the military.
Well, veterans have VA loans, 0% down.
And that's 100% financing. So on this Florida housing product, if somebody co-signs on that product, they don't allow the non-occupying co-borrower to be on the deed. On regular transactions, if they don't want to be on the deed, if they're co-signing and not living in the house, we don't have to have them on the deed. However, if I was co-signing for my daughters or getting them down payment,
be on the deed.
I'm going to want to be on the deed in case something, Lord willing, would happen to them.
Well, so, you would also be next of kin.
Yeah.
Yeah. Well, you and your wife.
Yeah.
And with that, we'll be right back for another 10 minutes and like, comment, and subscribe. And we're back here with Shawn Miller, who's on his phone, doing business, crushing deals, making money, and getting home buyers' houses. And those construction perm loans. See, now I got lender lingo.
There you go.
Call it LO.
Yeah, my wife even she could probably do my thing too.
Yeah, I mean, shit, bro. You use all these terminology, and I'm just like, man, I feel like I'm talking to a Gen Zer over here. Hey, no cap.
Yeah, but I'll be 50 next year. The years go fast.
50?
Very fast, yes.
You don't look a day over 49.
Yeah. So it's wild now when I'm doing, applications for clients that are, like I graduated high school in 94. So I'll be like doing pre-quals for people born in 1998, 2001,
Actually,
2002.
This is a great question. What's the youngest applicant you've ever had?
I had one that was 19 years old.
So and not 18.
Yeah, 19 years old. This was in the last year, and I was like, "You're too young to buy." I was joking. As long as you're 18, and if in that situation, you would probably have to have your parent co-sign because typically you're going to need a 2-year work history.
Did he have a parent co-sign? Or she? Or
I believe on that one they did, yes. So typically you're going to need a 2-year work history. Unless you're like going to college, you graduate from college and you start as a teacher and you never worked before. Well, we can use your college education.
What if you started working at 16?
I guess that's a good point. That's a good point.
Right? Can you still qualify as soon as you turn 18? Because I have a niece. She's 17. She's been working since 16.
Okay.
And I put into her head, save money, buy a house as soon as you turn 18.
Yeah.
Is that possible if the 2-year work history starts prior to you being, I don't know what you call it, an adult?
Yeah. So as long as her full-time pay, her salary,
it's got to be full-time, right? Kids, minorities, Or not minorities.
We
What the fuck am I
minors,
talking
minors.
about? Minors. There you go. Minors. Minors can
Yeah.
only work a certain amount of hours.
Correct. So we can just still use that for a 2-year work history, and then if they let's say they happen to get a full-time job at 18 and they're making, I mean, it's going to be tough to qualify for a house around Tampa Bay for $50,000 a year, but
Well,
you know,
FHA.
so let's just say they're making, do they get a salary of a $60,000, $70,000
Call it
salary?
less than that. Call it less than that. Call
Okay.
it like 35.
Okay. Well, I mean, if that was enough to qualify for the
For
home,
$100,000 condo, because remember, you said condos were the easiest ones to qualify for.
yeah. So hypothetically speaking,
Apartment.
that the income is enough. Yeah, as long as it's full time, we would be okay for the job when they turn 18.
So it is possible for an 18-year-old.
In theory.
In theory.
In theory.
But that's enough. We have to give the kids a solid start, man.
Yeah.
Because I didn't buy a house until 2021, and I'm 36. That was 4 years ago. So I was 32, and I fucked around, but I made money, but I blew it all.
Well, a lot of us did in our 20s.
Yeah. I mean, shit. It's possible, though.
In theory, it's possible. Yes.
Yeah.
Yeah.
Well, in theory, anything's possible.
Yeah. But in our surrounding counties, Hillsborough, Pasco, Pinellas County, for the most part, somebody's going to need to be making.
What about Lecanto and Citrus?
Well, okay.
See, there you go.
There you could probably get
If
away
you're
with
willing
making
to commute.
$50,000. Yeah.
If you're willing to commute.
Or you work remote.
Or
Yeah.
work remote.
I had a client that had an offer on a property in Sebring, and I think it was like around $200,000.
Sebring is south, right? By Okeechobee?
Actually, I don't even have any idea where it is.
I think it's by Okeechobee.
Yeah.
Yeah.
Yeah, and so I think some areas like in Punta Gorda, there's like some affordable housing down there. You know.
Oh shit! Yeah. So, affordable housing. That is just rentals, though.
Well, there's affordable sales prices in some of those areas too. Citrus County.
So the government forces you to sell a property for less than what it's worth?
No. Or Polk County, the average sales price is $350,000.
You keep talking about
Polk
my
County.
Grady Judd over here, dog.
Yeah.
Polk County's not a bad area, man.
Yeah. My wife grew up in Lakeland. I was like, hey, honey, do you know how much we could get a house for in Lakeland compared to in West Chase? She goes, we're not moving to Lakeland. She goes, I grew up there.
I mean, my cousins, they live in Lakeland, and we always love going over there.
I like it. It's a cute little downtown.
Well, if you call it a downtown,
Small,
but it's very country.
Yeah,
it's very country. It reminds me of Dade City, and that is where I'm gonna retire. I'm gonna retire in San Antonio or Dade City.
Yeah, you keep bringing Dade City up,
bro. I fucking love it, man. If you ever drive the back roads, St. Joe or fuck, that's the only road.
I'm not used to hearing not used to hearing back roads in Florida.
Oh, bro. Hey, we're talking about there's hills out there.
Yeah.
So we're getting down to the end of the episode. You know, it's been awesome to have Shawn on.
Yeah, thanks for having me.
I know we haven't been on Happy Hour Holidays in a while, but yo, Shawn.
I forgot my sunglasses.
Well, it's pretty bright in here.
Yeah.
Shawn, give us a pitch why people should use Van Dyke Mortgage. I've used Van Dyke Mortgage, so that should be enough. But give us a pitch why they should use you and your team at Van Dyke Mortgage, established in 1987.
Yeah, so experience. I've been in the mortgage business since 2003. We're a local lender per se. However, we are in 48 of the 50 states, all but Missouri and like Hawaii. But yeah, so we're company's been in business over 40 years. I've been in the business over 20 years. Got a great team in place from processors, ops, admins, loan originators on the team. We have bilingual loan originator as well for anybody that needs somebody to speak Spanish or English. We're myself personally, I made top 1% originators in the United States for like the last 15 years. A lot of those are purchase transactions. You know, we're a direct FHA, VA, conventional, USDA lender. We're approved for a ton of different down payment assistance programs. We also have a lot of portfolio products for your condos that don't meet your normal guidelines. We have non-warrantable condo loans, which are your portfolio products. We have like for investors, no income document loans. We have for primary residents, no income document loans. alternative documentation, asset-based loans. So we got the whole gamut of loan products, and we give everybody our cell phone numbers, easy to get a hold of us. We have in-house processing and underwriting. I mean, I tell my loan originators, if you can't be successful at Van Dyke Mortgage, you're not going to be successful anywhere. And I really feel like we check all the boxes, and I'm grateful for the company I'm with. I thank the Lord above, for, blessing me with a great family, nice referral partners, great clients like yourself. So yeah, thanks.
So what's your take on the Bucks?
Buccaneers, wow, 3-0.
Let's go Baker.
Yeah. I'm pleasantly surprised with having the short staff on the offensive line.
Thank you,
yeah,
bro. Because the injuries have decimated us, and I'm fucking pissed. Mike Evans is gonna be out for the next 8 weeks, bro.
Yeah, I heard it was 3 to 4, but. Eight's worse, but I heard we may get Godwin back next
We're
week.
supposed to get Godwin back.
Emeka Ibuka. I'm also an Ohio State Buckeyes fan.
Oh my God, bro! Did you see the one-handed catch?
Yep. Class act, good guy, good Christian kid, awesome player, great athlete. We got some good backup receivers too. So my brother from another mother, Ryan Miller.
Ryan Miller. He's tight end. And we also got Tez Johnson.
Quick rookie.
Yeah, not bad.
Yep.
Cameron Brate.
Jalen McMillan. He'll be back.
J-Mac. I don't know if he will, bro.
Well, hopefully Tristan Wirf's back this week.
God, please.
Yeah, we can use our tight ends. We got 3 awesome running backs. We got multiple tight ends. So I think we'll be okay.
You didn't even say anything about the defense.
Oh, yeah.
Yo, Antoine Winfield.
Lights out. Yep, the man. Yeah. I mean, it was a little.
Zion McCullum. He's been leading in tackles on our team for the last 3 weeks. Zion, you're the man.
Yeah, Levante David. He's steady.
Do you know that he has started the most games as a Buccaneer ever?
That's awesome. Love loyalty.
Yeah.
I'm loyal with my company. I've been there 15 years. It's awesome to see Evans and.
But you're not from
David.
Tampa.
I moved down here from Columbus, Ohio. So I'm that's what I like.
Yeah, well, of course you're not going to be a Browns fan.
No, I converted very quickly. My buddies were all Browns fans in Ohio, and I converted very quickly after I moved here in 2006 to the Buccaneers.
That makes a lot of sense. All right, guys.
Thanks.
This has been another great episode of Happy Hour Holidays. Van Dyke Mortgage. Check them out at vandykemortgage.com.
Yeah, and our Shawn Miller, homeloans.com, or you can reach us at our office, 727-214-6400.
And you can get it pre-approved on Shawn Miller.
Yeah, you can go on the website. We'll give you a call, or just give us a call. We're more than happy to take care of it over the phone, or come and meet with us at our local office in Tampa on Lineball Avenue.
And I've used them before. He got me approved when I shouldn't have been approved. Hey, I still got my house, so it ain't foreclosed on.
Yeah.
So, hey, man, happy Wednesday.
All right. Thank you.